Report. It's halfway through the trading session. I'm Mangla Malu. With me is Nigel D'Souza working from home. Nigel, we started off fairly well on the Nifty, holding up above that 10,000 mark, but seems like that momentum is cooling off a little bit. We're halfway through the trading session. Not to say that we've dipped a fair bit, but just a bit of cool off perhaps, given it's the afternoon time.
Well, that's right, Manglam. It was always going to be a little bit tricky when we have such a big gap up. That was always going to be tricky taking a long position. Now that you've got a bit of a dip towards the 9,950, the risk reward could be a little bit more favorable if you see a little bit of a dip. Because keep in mind, in yesterday's trading session as well, we bounced more than 100 points from the low point of the day. So put that together, today's 150-point rally that we're seeing, even now, even after the dip, and yesterday's 100-point rally, so we're 250 points odd. Let's see whether or not, we can hold on to these levels and maybe build on to those gains. But I'm just looking at the Dow futures. They are not indicating a very bright start, out there after the big rally that we saw overnight. So let's see whether or not we can build on there. For the time being at least, not too much to worry. 1.5% gain on the Nifty, the mid-cap index holding firmly in the green, and the Nifty Bank, that's the one that's driving the index today.
That's right, Nigel, and in fact, just as we speak, the mid-cap index is outdoing the frontline indices in terms of gains. This morning, we had the mid-cap index underperform by sitting with a gain of around 1.5% or thereabouts. So the intraday chart of the mid-cap index will tell you that that index has no problem, irrespective of what's taking place as far as the frontline index is concerned. In fact, if anything, the mid-cap index has only gained in just the last few minutes. First up, all the top stories. The US Fed's decision to buy corporate bonds boosts global equities. Frontline indices gain nearly 2%. Metals and banks lead, but Tata Motors sulks on weak numbers.
And banks are making the news today. Axis Bank retail head resigns with Lakshmi Vilas Bank gets another suitor and Pramod Bhasin back. Clicks Capital. RBI nod is awaited.
India is shipping out more exports, says GNPT chairman to CNBC TV 18. Even as May exports improve to $19 billion from $10 billion in April, JNPT is working at 90% capacity in the last 5 days, up from 70%, which was earlier in the month.
And it's the 10th consecutive day of fuel price hikes. Petrol gets dearer by 4 paise and diesel is hiked by 57 paise per litre in Delhi.
Some positive news coming on COVID front. India's daily recovery topped the 10,000 mark, driven by Maharashtra. The recovery rate rises further to 52.5%, and the gap between total recovered cases and total active cases widens. All right, a handful of stocks moving higher as we speak. We have Amara Raja batteries from the broader markets doing well. Along with that, we have Exide as well, which has moved closer to the higher end of today's trading range. So the mid-cap space doing well. Let's get in, all the stocks which are buzzing around. We have the top movers on the lower side. Tata Motors, the big loser, reacting to a very weak set of its numbers. Sonia's here with the key highlights. Sonia.
Has been a string of bad news for Tata Motors, both on the standalone as well as the JLR side. I think the most important thing for me is the management in their own commentary said that Q1 of FY21 will be significantly weaker than the preceding quarter in both Jaguar Land Rover and the standalone business. They've also stopped giving any kind of guidance for what the future would hold, and all of this uncertainty has led to the stock falling 4%. But let me tell you about the numbers itself. Earnings were very weak, well below street estimates. Both JLR and standalone businesses posted steep losses. In fact, for JLR, the EBITDA margin that we track very closely came in at 4.8%, which is a 500 basis points year-on-year fall compared to an expectation of 9%. The standalone business as well, the loss before tax was almost 4,800 crores, and the management guidance was on the weaker side. They also said that their investment spending in FY21 is going to be much lower than what they did in FY20 and FY19, and they expect an improvement in terms of cash flows. Now, if you look at what brokerages have said, CLSA maintains an underperformed rating. They say that the lower capex should stabilize their debt. However, equity infusion is still the need of the hour. The Q4 results were significantly below consensus estimates, and JLR and India business showed that the margin pressure is very high because of competitive pressures as well as softening demand environment. The overall leverage should continue to be elevated. So there are problems galore for Tata Motors.
So Tata Motors goes down as a bit of a disappointment, but Canfin Homes, that's the stock that's doing well in today's trading session. Abhishek joins us to fill us in with all those details. Well, Abhishek, you look quite good.
It's been a strong performance from Canfin Homes. Look at the top line growth. The NI growth was 35% YOY and more than 10% sequentially. This was largely driven by the fact that they were able to bring down their cost of funds. The loan growth was at 12.7% YOY and about 2.5% sequentially. So if you do a back of the envelope calculation, it shows that the net interest margin might have improved by 25 to 30 basis points. Remember that in the previous quarter, the net interest margin was at 3.4%. So add to that, this net interest margin would be the highest in last 8 quarters or many years. The operating profit was also strong, growing at 36% YOY and about 6.5% sequentially. Their asset quality improved. Gross NPA ratio came down by 4 basis points sequentially, and at 0.76%, it's perhaps the best in the industry. Back to you.
All right, that is Canfin Homes up by about 7%. But another financial stock which is doing well is Lakshmi Vilas Bank, after the bank signs a non-binding agreement with Pramod Bhasin-backed Clicks Capital for proposed amalgamation. Sources tell CNBC TV18 that Clicks Capital is looking to acquire majority stake in the bank. Ritu Singh joins in with all those exclusive details. Ritu.
Lakshmi Vilas Bank has been in need of funds, and therefore this is the second deal that the bank is attempting in less than a year after Reserve Bank of India turned down its proposal to merge with Indiabulls Housing Finance last year. Now Lakshmi Vilas Bank has said that it has received a preliminary non-binding letter of intent to for a deal with Clicks Capital. Now, who is Clicks Capital? It is an NBFC which is focused on the SME lending business, and it is 85% owned by Aeon Capital. Clicks Capital, we're given to understand, is looking to acquire a majority stake in Lakshmi Vilas Bank, but of course the final stake will depend on the kind of agreement that both the parties reach and what the Reserve Bank of India finally agrees to. But the investment size that Clicks is looking at is upwards of about 1,500 crores is what we've been given to understand. The talks are at very early stages. The bank said the due diligence will take about 45 days, but our sources tell us that it may be a quarter or so before both the parties can submit a proposal to the Reserve Bank of India for its final nod. Remember, RBI's nod will be the make or break in this deal. It will be very critical for either of the parties to be able to close it. But for now, Lakshmi Vilas Bank remains under RBI's prompt corrective action. So it needs to be seen whether it is able to close this deal and raise the money.
All right, let's get to the next stock in focus, and that's on the back of a CNBC TV18 exclusive. We understand that IDBI Bank is in talks to sell 23% stake in its insurance venture that it has with Federal Bank, and they are in talks with Aegis Insurance. Yash Jain, he's picking up all those exclusive details. He's going to be filling us in terms of what could be the likely deal as well. Yash, over to you.
Well, recently Federal Bank's board also approved buying about 4% stake in IDBI Federal Life Insurance from IDBI Bank, and what we're given to understand from my sources is that IDBI Bank is very close to securing another transaction in IDBI Federal Life Insurance. What we're given to understand is that IDBI Bank is in advanced stages of discussions and negotiations with foreign partner Aegis Insurance to sell 23% stake in IDBI Federal Life Insurance to Aegis Insurance. Do remember, at this point of time, Aegis already holds 26% stake, and with this proposed buyout of another 23%, it will be taking its stake all the way to 49% and exhausting the foreign direct investment limit. What we're given to understand with respect to valuation is that this transaction could value IDBI Federal Life Insurance at about 1800 to 1900 crore, which is very similar to its book value. Also, as far as the timeline is concerned, we are given to understand that the bank is targeting to conclude this transaction by September end. Of course, we'll have to wait and watch on how the negotiations and accordingly the timeline progresses. We've also written to IDBI Bank on this particular story, and we are yet to receive a reply from them.
All right, a few hundred crores coming in for IDBI Bank. Their overall market cap close to around 35,000 crores. So we'll keep an eye out on how big a difference it will make to them. But news at the bottom of your screen, ICICI Bank has cut retail term deposit rates by 15 to 75 basis points across tenors. And that stock is in focus as well. But let's shift focus to another CNBC TV 18 exclusive. We understand that, just a second, we'll move on. We have another CNBC TV 18 exclusive. We learn from sources that Tata Sons has initiated pay cuts at the top level to reduce the impact of COVID-19 on costs. Kritika has more details. Kritika.
Well, tough times call for tough measures. So what Tata Sons is looking at doing is cutting down pay of the senior most employees. So this, we understand, is likely to be at the vice president level and above. Mid-management and junior management is unlikely to be affected. And that is an important strategy there. They are trying to minimize the impact on the mid and the junior level and take it entirely on the senior brass. So the percentage, according to our sources, is about 15 to 20% of pay cuts at the top level. Across Tata Sons and group companies. Now, if you break it down, Tata Sons is 15 to 20%, so is Tata Consultancy Services. But we understand that Tata Steel and Tata Motors may see pay cuts at the top brass between about 15 to 25%. That's the same in the case of Tata Power as well. The pay cuts go up to 25%. But as far as Tata Global Beverages, Tata Chemicals and Indian Hotels is concerned, we understand that it is between 10 to about 20 odd %. So it's up to 20%. In some cases, you could see a lesser impact as well. Now, just to clarify over here, the pay cut is at the base salary. So the performance related component is not affected yet. So that is usually a variable component that is going to be depending on how the performance evolves at the end of FY21. But what we understand is that this is just the first step with respect to optimizing costs. They're also looking at various models to be able to increase synergies, to be able to effectively cost optimize across not just Tata Sons but even group companies. No official comments though as far as Tata Sons or group companies is concerned.
Okay, all right. Thanks so much for that, Kritika. Well, keep an eye on the markets. We've seen a leg down actually. Now we have moved towards that 9,930 odd. In a few stocks, Tata Motors is seeing further selling pressure. A few factors play out. As Sonia told us, the numbers weren't great. The guidance wasn't great as well. And maybe, you know, some bit of expectation that the promoters could come and infuse more money. That didn't play out. So on the back of that, that stock has moved lower. But keep an eye on a couple of other stocks. Axis Bank, that stock has seen a downtick. ITC as well. Pull up ITC. In fact, that was holding more or less flattish. Now that's taken a leg down. And on the back of that, now the Nifty, from being up more than 200 points, is up only around 120 points or thereabouts. So we'll, I think on that note, we'll just slip into a short break. You come back, we'll get you some exclusive, details that we call out, some interactions that we have had earlier. Mark Mobius, he spoke to us yesterday. We'll tell you what he said. And we also got some opinion coming in from JP Morgan early today. Stay with us.